All right, good evening, everyone. We are a team of representatives from Novartis, and tonight we're going to be telling you how Novartis can be an excellent addition to your portfolio, no matter your investing strategy. So, brief overview. My name is John. I'm going to give a company background, who we are, where our company came from. Madi here is going to tell us about the company's sales. Then I'm going to come back up and tell you a little bit about the pipeline, what's in store for the future in terms of our products or various divisions. And then Dustin here is going to tell you what you really want to know as investors, all about the company's financials. Mira will then come up and tell you about the competitive landscape, what's going on in the industry around the world. Finally, I'm going to close by tying in something that I'll show you is important to investors, and that's social ventures around the world. I know it's Dr. Jabicki's favorite topic. And I'll also wrap things up with a closing. I'll note here that we have allocated about 25% of our time for a Q&A session at the end. So if you have questions, feel free to ask them then. If something is pressing or urgent, we make a simple mistake, feel free to call us out and we'll just correct that as the slides go on. A basic overview of company background of Novartis. We are a Swiss-based international company, a global pharmaceutical firm, and basic background on the company's history stretches back to mergers and acquisitions to the 1800s. But essentially, Novartis in its current form was founded in 1996 between a merger between Sandoz and Ciba-Geigy. Now, having said that, we are an international firm. We have 135,000 employees in around 100 countries. And we tell patients our mission is to care and to cure. And today we're going to show you that as investors, no matter your investing strategy, Novartis can occupy a place in your portfolio.
So to have an idea about our sales performance in 2013, Novartis achieved about $58 billion sales in 2013. The biggest proportion of that sales was from the pharmaceutical division with 56%, followed by Alcon, which is the eye care, and Sandoz, which is the generic line, with 16 and 18% respectively. So in 2014, we are moving our divisions into 3 divisions, focusing with innovation, power, and strategy. Basically, our Novartis achieved 5% growth in Q4 over the last quarter in 2013. Again, pharmaceutical division continued to be the lead in that division, in our sales performance. It achieved a 1% growth over the last in Q4 compared to the last quarter in 2013, followed by Alcon and Sandoz with 6% and 7%. Now, in 2014, Novartis reduced the number of divisions from 5 to 3 divisions, which is pharmaceuticals, Alcon, and Sandoz. We believe, as Novartis, is through this move, we are now more focused we can focus our energy, improve our communication, and boost our performance in terms of sales and how we react to our shareholders. Moving on to the emerging market, our emerging market made an amazing job in 2014. Basically, at each quarter in 2014, each quarter was better than it was in 2013. As you can see here, we achieved 13% in Q3, 9% in Q2, and 7% in the first quarter, compared to the same quarter last year. Now, these are the top markets the top performance markets in our emerging markets. As you can see, the top performer market in Q3 was Brazil with 24% improvement, and in Q2 it was Turkey with 27% growth over the last year.
So I'll go over some brief overviews of our our pharmaceutical pipeline. We have, obviously as a pharmaceutical firm, far too many products to go over the entire pipeline, and I won't show you the specific details, but I'll highlight some key products. Signifor for Cushing's disease and Simbrinza for glaucoma are 2 products that are receiving positive regulatory approvals in both the European Union from the CHMP and the United States from the FDA. and some products that don't have particular names yet, that are receiving early initial approvals and excellent phase 3 clinical trials are LCZ696, a drug for chronic heart failure, AIN457 for psoriatic arthritis, and LDE225 for basal cell carcinoma. Again, as a pharmaceutical company, I won't show you the entire pipeline, but for those who might have invested already in pharmaceutical firms and want to look at the numbers, I'll tell you that from 2015 to 2017, we have 14 new molecules, 17 new indications, and 1 new formulation in development. And again, for those who'd like to know, from 2018 and beyond, we have 15 new molecules and 8 new indications in development. So the point here is that our pharmaceutical pipeline growth for the future is very healthy. And for those keeping score, that's a total of 55 products. The Alcon pipeline is also extremely healthy. Alcon gave us 6% growth year over year this past quarter, and much of that came from sales of surgical systems, which gave us 10% growth. A lot of that came from this system here. This is the Centurion Vision System, a full surgical suite for eye surgeons. It's got innovations in the lasers the surgeons use, innovations in the software, and in the microscopes that they use to image the surgery. But in addition to that, our eye care division, we recently purchased the WaveTech ORA vision system. This is a system of eye surgery that's in what's called intraoperative aberrometry surgery. Basically, this is a new form of eye surgery, and we're very excited to see how this and the Centurion will continue to fuel those sales within Alcon.
So what are the differences between the two?
This is, does anyone know we had a guy that was an expert, our 5th member, he's out this week on the Alcon, but the WaveTech is a little bit of a different system. I don't know that they're going to compete with each other, but this one is already well established, and we're diversifying a little bit the markets that we're focusing on.
All right, as investors, you're likely interested in the balance sheet. Won't bore you too long for it, but needless to say, our assets are currently hovering around 125 billion, with about $54 billion in liabilities, leaving a total equity of $71.338 billion. And you'll notice that from Q4 of 2013 up until this point, Q3 of 2014, we have a slight increase in our liabilities, and that is due to us taking on some debt because we recently did $5 billion in stock buybacks, as well as an annual stock dividend of $6.8 billion. And here's a quick look at our Q3 income statement, some of the key items from that. You can see here is on the left is the numbers for Q3, and on the right are the first 9 months of 2014. Our net sales grew year over year, 5% in common currencies, 4% in US dollars. And our core operating income improved as well, 11%, as you can see, circled in green there. Our overall operating income is 18% in common currency improvement year over year. And that includes some of the money that we made from investments and things like that. And if you'll notice here, this might seem very exciting, our net income improving 49% year over year in common currency. And that's, a lot of that has to do with our sale of our 22% stake in Idenix, which is was a startup company that Merck bought, recently acquired for about 4 times the stock price. So, cha-ching. And that is, of course, not indicated in our core earnings per share improvement, that one-time sale of that company, which is 13% year over year. And you'll notice that this is in spite of some decrease in free cash flow, and the reason that we are still improving our core earnings per share is due to a substantial improvement in our margins. And here is a bar chart indicating our earnings per share for the last trailing few quarters. As you can see by the plus sign, our most recent report, we beat expectations. We turned in a number of $1.37 per share off of analyst expectations of $1.30, which is a 5% beat. And you'll notice that that recent beat was reflected in improvement in our stock performance here. We recently just hit our all-time high of $96.97 per share on November 29th of this year. As you can see, this is dating back from 2012, and we've averaged about a 20% annual return over that time period, and that is not including our dividend. For those of you interested in the value of the stock, I've indicated the price per earnings ratio up there. As you can see, the industry average is significantly higher than ours, 24.41 versus 21.68, which is a 12.6% discount relative to our peers in the mega cap pharmaceutical industry. And lastly, our dividend, which we're looking to improve for the 2015 fiscal year to $2.93 per share, and off of our last closing price, that is about a 3.1% annual return.
So there are competition levels within Novartis, and I'm going to go ahead and identify them through 5 aspects. So to start with, let's go ahead and look over the bargaining power of suppliers. This is relatively low, and this is due to the fact that there is a wide range of suppliers available to Novartis. Thus, if a supplier goes ahead and increases their prices, Novartis can go ahead and switch them. Thus, they hold the power in that. Similarly, the bargaining power of buyers is also low. As long as our products are under patent protection, buyers don't have much power. And now let's go ahead and take a look at the threat of new entrants. In a pharmaceutical company, the threat of new entrants is relatively low, and this is mostly due to research and development. Research and development is vital. In addition, it's also costly. It takes years of experience creating innovative products and having the trust of the public. Thus, the threat for us as Novartis is relatively low. However, on the other hand, the threat of substitute products is at a medium. As long as our products are under patent protection, we are safe from substitutes. However, once they do go off, we do face some competition with our rivalry industry. In addition, we do have our generic line, Sandoz, so we do face a little bit of threat from them as well. But Novartis definitely tries to go ahead and keep those threats at a minimum. And then the competitive rivalry within the industry. That's relatively high for a pharmaceutical industry. Each company wants to go ahead and maintain at the top of their position. But Novartis definitely goes ahead and makes sure that our sales and our research and development is at a high level. So let's go ahead and take a look at our sales, particularly that of our prescription sales. As you can see, in 2012 and 2013, we've definitely had high numbers. And in 2013, we surpassed 4 of our competitors as we went ahead and increased our sales. And then our research and development on the other hand. In both 2012 and 2013, we had the top level of expenses in research and development. And for us, research and development is an investment to the growth of our company. And you can definitely see a positive correlation with our research and development and our prescription sales. So as we go ahead and continue to grow our company worldwide, we want to definitely go ahead and improve our research and our prescription sales as we continue on to our next fiscal year.
Social ventures. Our social ventures program is basically an improved scope of business models between social ambitions around the world and business. Now, social ventures aims to invest money in emerging markets worldwide and then have those markets increase their economies and their growth, giving healthcare and access to healthcare to the people with the least access, but the ones who actually need it most. So social ventures generates a small profit, which allows people in those communities to kind of reinvest in Novartis and fuel that growth there, making them self-sustaining as well. But let's be honest, you're investors, right? Why do you care about social ventures? Well, social ventures is a win-win-win for patients in developing countries, Novartis as a company, and Novartis' shareholders worldwide. Patients get better access to healthcare. They improve their economies, sustain their environment, their countries, everything. They increase their personal and professional relationships with Novartis, and Novartis, as they strengthen their professional and personal relationships, that translates into increased revenue for us and increased growth for shareholders. So social ventures is a win-win-win for everybody.
So it's not really a social venture, it's just manipulating people to make more money.
You know, I'll get to that.
And I support that. Strategy. Tell them
It
that you
is
care.
strategy. It is strategy, you know, but we do care. So closing up, Novartis as a company, we tell our patients that no matter your pharmaceutical needs, Novartis is your ideal choice. And today, I hope we've really shown that no matter your investing needs, no matter your portfolios and your strategic goals, Novartis can occupy a strong position in any portfolio. At this time, we'd like to open it up for a few questions. And thank you for your time. If I could, I'd like to respond to a quick one on that. So, a bit of strategic perspective, let's say. The United States cannot help every country in the entire world, right? The United States has to pick and choose the countries it helps. I don't think, it's a philosophical argument, we could talk about it for hours in the weekend, but I don't think that the United States should be, you know, you should knock the United States for picking and choosing the companies that is potentially going to interact with the United States positively in the next 5 years. Similarly, Novartis wants to expand their operations globally, and we do choose countries based on those somewhat likely to have increased revenues and increased business with us over the years. But we are focused on the patients. We are a patient-focused company. And I hope we've shown you how that can translate into increased revenues and increased profits for shareholders. Other questions?
Now you said that Novartis is in 100 different countries. What does that exactly mean? I would imagine that the R&D is concentrated to a handful of countries, maybe just 2 or 3.
I can, does anyone else want to do it? I was looking up the exact number. I mean, we work with the company, but I was looking up the exact number of countries the company is in. It's actually pretty difficult, as you might imagine, to pin down. Alcon has a number they pin on at 85 countries. But let's say, who's the photographer that took this photo? If they were working in, you know, this is from a lab in Canada or the US, but let's say they took a photo in Africa. Does that country count? So it's a little bit difficult there. You know? So I think we're being a little conservative when we say it's less than 100, but it's roughly.
I didn't hear what your top sellers are now, and you know, do you face a patent cliff? Can you sustain your revenues, things like that? I mean, I saw the 3 divisions you have now, but there wasn't much detail on that. So.
Yeah, actually, basically we are for the 3 divisions. As you can see, the major proportion was from the pharmaceutical divisions. And the top 3 selling medications are Gilenya, which is the only medication the only oral medication for patient with multiple sclerosis. Usually patient take injection for that, but Novartis has the only oral medication. It has approved last year, and the patency is for 25 years. It's one of the top selling medication. The second one is called Gleevec. Gleevec is one of the big, it's the only medication that has been approved based in phase 2 clinical trials because of high efficacy of Gleevec. The third one is Galvus. Galvus is a medication used for diabetes as well. And these are the 3 top selling medications. Gleevec achieved about $14 billion, and Gilenya achieved about $9 billion.
Thank you.
We've got about 1 minute left. Do we have any quick questions? Maybe
Well, you brought up a number of 55 drugs in development of a particular category, but how many of those can be reasonably expected to come to market, and not only that, actually be profitable?
It's difficult to pin down, but we could get offline and discuss the statistics and look at the numbers a little bit more. Other than, I'm sorry we've run out of time. Thank you for your attention today, and again, we want to remind you as investors that no matter your strategic portfolios or goals, Novartis can occupy a strong position in any portfolio. So thank you.
Thank you.